I'm Charlie McGarraugh, the head of markets at blockchain.com, the world's most trusted crypto company. Got a quick recap of recent action in the crypto markets for your thinking and enjoyment. Let's dig right in. So, recent trends in the markets. A couple of big things happening. Really, the defining moment of the last 2 months in crypto trading was the meltdown in March and the market's subsequent recovery and working off the hangover for that. We've seen basically low volatility on the way back to kind of the pre-implosion levels, and that's kind of come in the context of a market that's delevered and at more reasonable conditions in terms of the OTC lending market, which we'll dig into a bit more. From a technical perspective, we're kind of back to the top of the recent range, and while a few indicators are kind of flashing yellow, my own view is that perhaps this is signifying enough strength to manifest a greater breakout, but only time will tell. In terms of on-chain metrics, which we'll only touch on very briefly because others later on may have more to say about that, we have seen, I think, nothing that looks overly concerning. And a look back does validate the idea that there was, distressed stop lossing in March, which won't come as a surprise to anyone. And then we'll discuss a bit more about what more to look for in the coming weeks. Okay. Firstly, here's a little chart of realized volatility over different time horizons, and what we can see is that short-dated volatility in Bitcoin went as high as 220%. That's a 10-day rolling vol, and has now backed down to the baseline basically before the market had its big moment. And so volatility is really kind of back down, and these longer indicators of volatility, which are just longer rolling windows, are also saying the same thing basically, which is it's elevated, but as the crash comes out of the look back window, that will also revert back to baseline, assuming nothing new happens in the market, which is always possible. So, okay. Secondly, the sell-off in March has, I think, caused some questioning of the broader investment narratives for Bitcoin in the market. Gold has massively outperformed this year as global growth gets re-rated downward, and Bitcoin, which is our leading contender for the future of hard money, has really not kept pace, kind of on a relative performance basis. Now, obviously, Bitcoin's a lot more volatile and there's a lot more going on, but during the crash, gold and Bitcoin all sold off as market participants just deleveraged in general. Gold has bounced back, and Bitcoin has bounced back less, I would say, kind of on a relative basis relative to its recent ranges. I think the other thing that's really quite notable to see here is that the Bitcoin market started underperforming even as gold was outperforming before the big crash, which probably shook the confidence of some crossover market participants. Here again, though, it's too soon to declare Bitcoin dead as a macro hedge, and what we see actually is that CME Open Interest is actually back to the highs. So somebody out there in institutional world is still playing the game, presumably at least partially from the long side, and that's keeping track back to the highs, even though we're nowhere close back to the highs in Bitcoin. So maybe the smart money's buying, or maybe people are just chasing a story that doesn't work anymore. In terms of macro conditions, one of the indicators I quite like to use is the ratio of gold to copper. Gold is kind of anti-growth. Copper is, obviously a great proxy for global industrial production. And what we're seeing is that the gold-copper ratio has kind of at the highs, but having a hard time breaking out to go any higher as the market's gotten a bit more optimistic as stocks have bounced back. And Bitcoin, which, maybe, should be tracking this as a sort of, if the digital gold narrative is the dominant narrative, has really underperformed. On the crypto lending market, where to from here? I guess we've seen a huge deleveraging amongst OTC lending participants, and that was really manifested in the shape of the curves in futures changing, and Bitcoin getting much more expensive to borrow relative to dollars at the height of the sell-off, which is very interesting because the rest of the world system, dollars got very precious, and then the Bitcoin system, even as the Bitcoin price sold off, it got very hard to borrow Bitcoin because Bitcoin is the the working capital that is used to transfer between venues and provide working liquidity for market participants. So same theme that drove dollar tightness in other markets, basically a squeeze on working capital across the system. Underwriting standards are now a bit more conservative. And we are starting to see basically a return to an upward sloping futures curve after being backwardated pretty heavily. I would imagine that continues and dollars get a bit more scarce in the ecosystem, but the dollar market probably needs to rally. The Bitcoin price probably needs to rally quite a bit more before dollars become scarce enough that the dollar borrows really tighten up and the dollar yields for collateralized with Bitcoin really go high, and those futures curves go into a big steepness. So right now it looks kind of more like steady as she goes. Market pricing is fair, and it doesn't feel like either crypto or fiat are scarce inside the ecosystem at the moment. From a technical perspective, using Fibonacci retracements over the last year, 8,900 and 6,250 are kind of the big levels to the top side and downside respectively. We're kind of in the middle of that, and threatening the 200-day kind of up in the low mid 8,000s, and so Bitcoin looks like it's manifesting an uptrend, but it won't really be confirmed until we've taken out the 200-day and then cracked 8,900 conclusively to define it like basically a new trading range. Using Bollinger Bands, the market does look like it's a little bit toppy here. The Bollinger Band channel has tightened massively on the back of the decline in realized volatility. But if you look at the next chart, which is the RSI, we don't appear to be overbought yet, so we can go a lot more. I guess my own working theory is that we're about to break out of the Bollinger Band into the halvening, and then the RSI can get materially more overbought than it is now. And I think the lack of leverage built up in the system with low futures open interest on the derivative exchanges and so forth is also sort of lending some credence to that idea. The market certainly has capacity to go for more versus where we're at right now, despite kind of being at the top of the channel. And I would expect basically that happens less with the channel break on the Bollinger Band, but more around an uptick in volatility that then sort of justifies like a wider range and higher prices. In terms of on-chain activity, what we saw was basically the average seller moving Bitcoin at a loss versus their historic price in the middle of March. And now we're kind of just kind of back to business as usual. This average seller realized profit would have to be a bit higher here in the kind of $200 per Bitcoin to signal kind of we're at closer to the end of an uptrend. So it's just sort of confirming trend extension to the top side for now is kind of my view. But that's just an opinion, and all opinions are subject to change at a moment's notice, especially in crypto, as we all know. It's always quite risky. Right. Okay, other themes that bear watching. Sorry, I had a bit of a slide problem there. Okay, other themes that bear watching over the coming weeks. Facebook and Libra having changed the architecture to be single currency backed is certainly interesting and could potentially provide more on-ramps into the space. China's digital currency is also another thing to watch with the evolution of the ecosystem. Stable coins, Tether's been growing on an ongoing basis, and that has probably contributed to less scarcity of dollars in the system. But yeah, at north of 7 billion now, it's really something to behold, and the market seems to be maturing on that side. Interestingly, thematically, the use of digital wallets for getting COVID-19 support to consumer and small business endpoints, I don't think we've heard the last of that, and that'll be a space to watch. Obviously, there's a lot of policy consideration there too, but that'll be a really interesting one. And then finally, on altcoins, there's still lots of work being done on DeFi, Ethereum, and the other Ethereum smart contracting protocol competitors. Lots of work on that, and definitely something to watch. And I'll leave you with this on that last point. Ethereum has sort of outpaced Bitcoin on the way back up here, with ETH BTC kind of back toward the higher end of the recent range. Definitely something to watch. If we're seeing an altcoin outperformance in the context of an uptrend, maybe the story isn't so much digital gold as just broader retail participation in crypto with the advent of the lockdowns, and that's certainly something to watch. I think if you do see an altcoin led further extension, I think it will confirm, a broader based participation in inflows into the ecosystem and argue for greater trend extension overall. That's it for me. Thanks very much for taking the time.